Right. So welcome to the deep dive, where we take a whole bunch of information and we kind of boil it down and say, hey,
Yeah.
What's the stuff you really need to know?
Exactly.
And today we are diving into Alphabet Inc. Ticker symbol GOOG,
Yeah.
putting it through, that value investing lens.
Yeah.
And we are using as kind of our roadmap the Google Stock Deep Research Guide.
Okay.
And this goes into like all sorts of things, from the business itself to the people running it, the management, the financials,
Yeah.
the market sentiment, who owns it, the risks. Like, it really kind of goes through the gamut.
Yeah.
And I guess our mission for you today is like, can you understand, does Alphabet really stack up as a compelling investment from a, solid value perspective?
Right.
And we're not just kind of skimming the headlines here. We're really going deep. And trust me, there are some surprising things in this research. Be sure to check out the comments on YouTube for potential stock ideas. But always remember the research and AI disclaimer, and you can find all our sources down there in the description below.
Perfect.
Okay, so let's dive into this, and let's first get a handle on the business itself.
Okay, so when I think about Alphabet, right, we think about this massive company.
Huge.
Yeah, huge, right? And to really understand it, you have to start with advertising.
Okay.
And it might not be the sexiest part, but advertising, still the engine,
Mm-hmm.
generating almost 75% of their revenue, as of Q3 2024.
Wow.
And that's everything from the ads that we see every day on Google search, right? YouTube ads,
Mm-hmm.
and then their wider Google network ads.
Yeah.
But what's really interesting is how they're building out these other significant revenue streams.
See, now this is where I think it gets really interesting, because they're not just an ad company anymore.
Exactly.
Right? Like, Google Cloud is really starting to show some serious growth.
Yeah.
Like 30% jump in revenue year over year in the last quarter of 2024.
Mhm.
I mean, that brought in $12 billion.
Right.
Like, that's a lot of money.
It is.
And that's driven by, their Google Cloud platform and this big push into AI solutions. So I think this is a really smart move to kind of diversify themselves for the long haul.
Yeah, absolutely. And, we can't overlook YouTube.
Right.
It's actually a dual revenue stream powerhouse.
Oh, interesting.
Yeah, you have advertising revenue, but then you also have those premium subscriptions.
Okay.
And combined with Google Cloud, they actually hit an annual revenue run rate of $110 billion at the close of 2024.
Wow.
Yeah, and even YouTube ad revenue alone grew by a very healthy 14% in Q4.
Wow.
So, it really makes you think about, the future balance of their income.
Yeah, for sure. And then you've got like, the other kind of pieces of the puzzle,
Mm-hmm.
like those Google subscriptions, like YouTube Premium and Google One,
Right.
their platforms, and, the Pixel phones and Nest devices.
Mm-hmm.
That whole segment saw like an 8% increase, bringing in another almost $12 billion in that same quarter. And it seems like, this move towards the cloud and subscriptions is a very deliberate strategy to kind of create that, more predictable income.
Yeah, exactly. And I think what this does, right, this shift towards these more stable revenue streams from the cloud and subscriptions, it kind of acts as a buffer right against the more like cyclical nature of advertising.
Yeah, for sure.
And then the research points out that, their significant investments in AI are only going to fuel that growth across both their cloud offerings and advertising capabilities. So for you, this means continued strong performance in the future.
Okay, I like it. Now let's actually look closer at like what Alphabet actually like offers. Right? Like, what are these things?
Yeah.
I mean, we all know Google search, like that still dominates.
Right.
Processing over 5 trillion searches annually as of January 2025.
Wow.
Like, that is a lot of searches.
That is a lot.
And they're constantly evolving it with AI.
Yeah.
Like those AI overviews, the new circle to search feature. I mean, it is so ingrained into our lives, it's hard to imagine life without it.
Yeah, and that's the fascinating part, right? It's almost become the default for so many of us.
Yeah.
And then you think about YouTube and, beyond just being entertainment,
Right.
it's a leading platform for all sorts of video and audio content, including podcasts.
Of course.
With this massive global audience and growing premium subscribers.
For sure.
And I think it's important to think about how these platforms actually reinforce each other.
Oh, interesting.
They're not just standalone products. They all work together.
Okay, I see that. And on the cloud front, you've got Google Cloud Platform, or GCP.
Yes.
And they're a serious player.
Absolutely.
They offer a huge range of services, like from AI and machine learning tools to data analytics and like core infrastructure. And they've really integrated their Gemini 2.0 AI model and the new agent space platform for AI agents.
Yeah.
I mean, it just shows you that they're serious about this whole AI thing.
For sure.
And, if we connect this back to the bigger picture for you, like their influence goes beyond just software.
Right.
I mean, Android owns a massive 71.75% of the global mobile OS market as of February 2025.
Huge.
Huge. And Chrome is like, the go-to browser for so many people. But something to keep in mind is this potential forced divestiture of Chrome because of antitrust concerns. And that's, a possible future disruption that you should keep in mind.
Yeah, definitely something to watch out for.
Yeah. And, we can't forget Google Workspace. Like, that's also getting this whole AI treatment with Gemini integration. And they've even adjusted their pricing.
Yeah.
And then there's the hardware side with the Pixel phone's Nest and Chromecast and those other bets like Waymo and Verily, which are those, longer-term, higher-risk, higher-reward ventures.
Right.
Like Waymo's robo-taxis, in L.A. and San Francisco.
Yeah.
I mean, they even have plans to expand to Austin and Tokyo.
It's like a glimpse into the future.
I know, it's crazy. So this really underscores their strategic positioning across all these, key areas of tech AI, the cloud and mobile. And it all connects, creating what they call the synergistic growth.
Yeah.
Where it's like each part, kind of feeds the others to create this stronger whole.
Exactly. It's like a well-oiled machine.
Yeah. Okay, so let's look at their market position and scale.
Okay.
I mean, the numbers are pretty insane.
They are.
Roughly 90% global search engine market share as of February 2025.
Wow.
I mean, that's leaving competitors like Bing with a measly, under 4%.
Yeah, they're dominating.
I know, it's crazy. And then Google Cloud is the third largest cloud infrastructure provider with around 13% of the market share in Q3 2024.
Okay.
Still behind those big players,
Yeah.
AWS and Azure.
Right.
But they brought in $12 billion in revenue in Q4, so they're definitely a force to be reckoned with.
Absolutely. And I think what's really noteworthy for you is the sheer scale of their digital advertising arm. They're actually projected to capture almost 25% of the entire digital advertising market in 2025, which translates to over $200 billion in net revenue.
Billion with a B.
Billion with a B. That's right.
Okay.
And then when you add in their dominance in the mobile OS and web browser market,
Yeah.
it just further solidifies their reach and influence.
I mean, that scale definitely gives them some serious advantages.
Yeah.
Massive cash flow, a wealth of user data. But, as we've seen, maintaining that share in the face of, this increasing AI competition and those regulatory headwinds like that antitrust case that's going on.
Right.
That's an ongoing challenge for them.
For sure. It's not all smooth sailing.
Yeah, exactly.
Yeah.
So I think this brings us to a really important question. Like, what is their core value proposition?
Right. What are they actually offering?
Right. Like, for us, as just individuals.
Yeah, for everyday people like us.
It's that easy access to this huge amount of information.
Yeah.
Essential services like Gmail, Maps, Drive.
Right.
I mean, often for free.
Yeah.
It's hard to imagine daily life without it.
It really is.
And then you think about, advertisers. It's that access to this huge and highly targetable audience.
Right.
Leading to strong returns on their ad spending.
Yeah. And Google Ads actually has a dominant 69% market share in pay-per-click advertising.
Right.
So that really highlights their power in this space.
Yeah. And for businesses,
Yeah.
the value is reaching those potential customers through YouTube and Google Ads, and then accessing those scalable cloud and AI tools from Google Cloud.
Right.
And I think the emphasis on that straightforward, AI deployment and integration is a big selling point.
It is a huge selling point because, businesses want to be able to implement these solutions easily.
Yeah, totally. So the research really emphasizes this like multifaceted value proposition and that interconnected ecosystem and all of that now enhanced by AI.
Right.
I mean, it's a pretty powerful combination that's really led to their market dominance.
For sure, they've built an empire.
They have. All right, so let's shift our focus to the people at the top.
Okay.
Chapter 2, management evaluation.
So the research really highlights Sundar Pichai's tenure as CEO, first at Google starting in 2015,
Right.
and then of all of Alphabet starting in 2019.
Right.
And they really point to significant growth and expansion
Okay.
during his leadership, including, his involvement in developing Chrome and Android. So for you as an investor, right, understanding the track record of leadership is crucial.
Yeah, that makes sense. And the guide actually mentions, they have this crisis response team within google.org.
Oh, right.
Which leverages all those resources that Google has to help, give information and aid during disasters.
Yeah.
So, it shows that there's some social responsibility there, which can be a factor for some investors.
Definite positive thing to see.
Yeah. But the research also shows that there's kind of a mixed bag when it comes to communication transparency.
Really?
Yeah. So they do publish those transparency reports on content removal and government data requests. But there have been calls from shareholders for more openness about their political spending and lobbying activity.
Oh, okay. I see.
So that's something to keep in mind.
Yeah, definitely something to be aware of.
And their ethical reputation has faced scrutiny, too.
Right?
Issues around censorship in China, concerns about user data privacy controversies, about their AI ethics. These are all important things to consider when you're looking at a company's long-term, sustainability.
Absolutely. Ethical considerations are becoming increasingly important.
Yeah. So Insight 14 from the guide kind of sums it up.
Okay.
Pichai's leadership has overseen growth and innovation, and the company does offer aid in times of crisis. But these ongoing ethical and transparency challenges, they need attention.
Right.
Ethical conduct and clear communication, those are key.
Yeah, those are vital for maintaining long-term trust.
Okay, so now let's see how they're using their money.
Yeah, where are they putting their capital? So they've significantly increased their projected capital expenditure for 2025 to $75 billion.
Wow.
And they're primarily focused on building out their AI infrastructure and expanding their cloud capabilities.
Okay.
So this really signals, their priorities for future growth.
They're putting their money where their mouth is.
Exactly. They're betting big on AI and the cloud.
Okay. And they've also been pretty active with mergers and acquisitions.
Right.
Like that recent $32 billion acquisition of Wiz, to beef up their cybersecurity offerings within Google Cloud.
Yeah.
And these strategic acquisitions really indicate, where they're focusing.
Right. They're not just sitting on their cash. They're actively looking for growth opportunities.
Exactly. Okay. And they've also been returning value to their shareholders.
Yeah.
I mean, they've done some pretty significant share buyback programs, $61.5 billion in 2023 and another $46.7 billion just in the first 3 quarters of 2024.
Wow.
And then they've committed to a $70 billion program on top of that.
That's a lot of money going back to shareholders.
It is. And that could really impact the stock's value, for investors.
Right.
And then get this, in 2024, they started their first ever dividend.
Oh, wow.
And they're planning to continue these quarterly payments, recently announcing $0.20 per share.
Okay.
So a pretty big shift in how they're returning value to investors.
Yeah, it shows that they're confident in their future earnings potential.
Yeah, for sure. And the return on invested capital, or ROIC, which is a measure of how well they're using their capital to make money.
Right.
That was over 31%. For the quarter ending December 31, 2024.
Wow.
Which means they're deploying capital pretty efficiently.
Yeah, that's a great sign.
So Insight 15 basically says they're doing a good job.
Right.
Investing heavily in future growth areas like AI and the cloud, but also returning value to shareholders through those buybacks and dividends.
Yeah.
And that strong ROIC suggests they're using their money wisely.
Right, which is a positive sign for value investors.
For sure. All right, let's move on to Chapter 3.
Okay.
Financial health.
Let's dig into the numbers.
Yeah, what do those key financial metrics tell us about how, stable they are?
So as of March 21, 2025, their market cap was about $2.183 trillion. Trillion, that's right. And their price to earnings ratio, or PE ratio, which is a common way to value stocks, that was in the low 20s in March 2025.
Okay.
And analysts are estimating that the 2025 PE will be around 18.43.
Okay.
So these numbers give you a sense of how the market's currently valuing their earnings.
Gotcha. And the revenue growth for the 12 months ending December 34, 2024 was a pretty healthy 13.87% year over year.
Yeah, that's solid growth.
Yeah. And the profit margins are looking really good.
Yeah.
A gross profit margin of 58.2% in 2024, an operating profit margin of 32% in Q4, and a net profit margin around 28.6%.
No.
On a massive $350 billion in revenue.
Yeah, they're definitely making money.
They are. And another thing that's important for their financial stability is that they have a really low debt-to-equity ratio.
Okay.
Just 0.04 at the end of 2024.
So they're not over-leveraged?
No, not at all. It shows they're pretty careful about how they manage their debt.
Right.
And they generated a strong $72.8 billion in free cash flow in 2024.
Okay.
With expectations for continued strong generation in 2025 And, free cash flow, that's essential for funding future growth and giving back to shareholders.
Absolutely. It's the lifeblood of a company.
Exactly.
Okay.
So Insight 16, sums it up pretty nicely.
Yeah.
They have strong financial health, significant revenue growth, healthy profit margins, a conservative level of debt, and they're generating a ton of free cash flow. And that PE ratio suggests that they're actually reasonably valued.
Right.
Especially when you consider their growth potential and market leadership.
Yeah, those are all really positive indicators of financial strength.
Okay, so now let's take a look at their overall financial stability.
Okay.
Like, how consistent have their earnings been over time?
So the research shows that they've had pretty consistent earnings growth over the past 5 to 10 years.
Okay.
Although the rate of growth has gone up and down a bit.
Yeah, that makes sense.
And, their dividend policy is relatively new, just started in 2024.
Right.
But they've committed to those quarterly payments. And with that strong free cash flow, it seems like there's potential for those dividends to be stable and grow over time.
Okay, and that's something that, income-focused investors are going to like.
Absolutely.
And, they've been careful about their debt with that low debt-to-equity ratio. And even though they have negative net working capital,
right,
which is the difference between their short-term assets and liabilities, their working capital ratio is above 1. So it shows they have enough short-term liquidity to cover their bills.
Okay, that's good to know.
Yeah. So Insight 17 basically tells us that their financial stability is strong. Consistent long-term earnings growth, potential for stable and growing dividends, good debt management, and enough liquidity.
Right.
So all of that contributes to a lower overall financial risk profile for the company.
Yeah, they're a pretty safe bet financially.
They seem to be. And the research guide has this really cool table that breaks down their key financial ratios over the past 5 years.
Oh, nice.
And even 10 years for some of them.
Okay.
And you can see how their revenue growth, profit margins, debt-to-equity ratio, and ROIC have been trending.
That's helpful to see the historical context.
Yeah, it gives you that clear perspective on how they've been doing financially.
Right.
So that brings us to the end of the first half of our deep dive into Alphabet.
Wow.
I know we covered a lot, but we're just getting started.
That's right.
When we come back, we'll be exploring market sentiment.
Yeah.
Who owns the company, those potential risks they're facing, and our overall conclusion.
Okay, this is good.
So stick with us.
All right, welcome back to the deep dive. We're now in the second half of our analysis of Alphabet stock.
Yes.
Through that value investing lens. So let's dive into chapter 4.
Okay.
Market sentiment. What's the general feeling around the stock right now?
Well, the research suggests that the sentiment is generally positive in 2025, and that's largely because of all the excitement around their potential in AI and their dominance in so many markets. It seems like investors are optimistic about their future.
Yeah, that makes sense.
But there's some concerns, too, about those huge capital expenditures for AI development.
Right.
And the competition's heating up across the board.
Yeah, that can definitely dampen enthusiasm.
It can. And interestingly enough, the stock price actually dipped a bit after their Q4 2024 earnings report.
Oh, why is that?
Because their revenue was just slightly below what analysts were expecting.
Oh, I see.
So it just goes to show that even a giant like Alphabet, isn't immune to those short-term market reactions.
Right. Even the best companies can have a bad quarter.
Exactly. But despite that little hiccup, Wall Street analysts are still mostly positive.
Okay.
With price targets for 2025 ranging from about $184 to over $235.
Wow. That's a pretty wide range.
It is. Shows that there's some uncertainty.
Yeah.
But overall, they believe in the company's value. There was another little dip after that $32 billion Wiz acquisition.
Yeah.
But the research says that's pretty typical.
Oh, okay.
It's just the market digesting, the implications of a big purchase like that.
Right. It takes time to see how it'll all play out.
Exactly. But overall, their strong Q4 earnings and their plans to invest even more in AI, those are seen as good signs for long-term growth.
Okay.
And just to give you a sense of, how many people are betting against this stock.
Right.
The short interest in their Class C shares, ticker symbol GOG, was around 38.8 million shares at the end of February 2025.
Okay, so there are some people who think the stock will go down.
Yeah, there are always some.
Always.
Okay, so let's move on to Chapter 5, ownership structure.
Okay, so who are the big players holding Alphabet stock?
Well, the research tells us that institutional investors own a lot of it.
Okay.
Over 60% of the shares.
Wow.
Yeah. big firms like Vanguard and BlackRock are among the largest individual shareholders.
Right.
So that shows a lot of confidence from those big institutions.
Right.
Definitely.
And the founders, Larry Page and Sergey Brin, even though they've stepped back from running the company day to day,
Right.
they still own a lot of stock.
Okay.
And more importantly, they control about 51% of the voting power.
Wow.
Through their Class B shares, which are those special super voting shares.
I see.
So they still have a lot of say in how the company's run.
Yeah, that gives them a lot of control.
It does, and former CEO Eric Schmidt also owns a bunch of shares.
Okay.
Or their research mentions that there's been some insider selling lately by execs and directors. But, that's not necessarily a red flag.
Right? It happens sometimes.
It's pretty common in public companies.
Yeah, for sure.
So that concentration of voting power in the hands of the founders,
Yeah.
that's a really key aspect of Alphabet's corporate governance.
Right.
Because it means that other shareholders don't have as much influence.
They have less of a say.
Exactly. And there's been more emphasis on things like, ESG factors, environmental, social, and governance.
Managing those risks with AI and making sure they can attract and keep talented people.
Right. So they're thinking about those long-term sustainability issues.
Yeah, they are. All right. Let's move on to Chapter 6, Risk Assessment.
Okay. Time to assess the potential dangers.
Yeah, the research does a SWOT analysis, which is, a good way to look at the strengths, weaknesses, opportunities, and threats.
Right.
So let's start with the good stuff. Their strengths.
All right.
I mean, they're the kings of search and digital advertising.
Yeah.
With a huge user base and tons of revenue. Their AI research and development is top-notch.
For sure.
Their financials are super solid.
Right.
They have tons of cash reserves, a diverse portfolio of businesses, access to all that user data and those sophisticated analytics.
Yeah.
And their global brand is super strong. Plus, they benefit from economies of scale.
So they've got a lot going for them.
They do, but every company has its weaknesses.
True.
So let's look at those.
Okay.
They still rely heavily on advertising revenue.
Right.
And those regulators are watching them like a hawk. Google Cloud is growing, but it's still behind AWS and Azure.
Yeah.
All that investment in AI and infrastructure, that's costing them a lot of money.
Yeah. And they've had some ethical controversies that haven't helped their image.
Right. Those are definitely things to consider.
For sure.
But now let's get to the exciting part, the opportunities.
Okay.
I mean, AI is booming.
It is.
And that's a huge growth area for them.
Yeah.
The cloud computing market is expected to keep growing like crazy.
Oh, right.
And there are all these new technologies and user behaviors popping up, which could mean new revenue streams.
Yeah. Plus, digital advertising and e-commerce are only getting bigger.
Right.
So they're in a good position to benefit from that.
And then you've got their other bets like Waymo, which could be huge in the long run.
Yeah, self-driving cars are the future.
I know, it's crazy.
It is.
But there are also some serious threats.
Right.
Like the competition in AI and cloud computing is fierce. And who knows what new search technologies or platforms might come along.
Right.
And those regulators are always a threat.
Yeah, they could really clamp down on them.
Yeah, and technology changes so fast.
It does.
They have to constantly innovate.
For sure.
And if the economy tanks, ad spending could drop.
Yeah, that's a risk for any company that relies on advertising.
And then, those ethical issues could really hurt their reputation.
Right. That's a delicate balance.
It is. So that SWOT analysis gives us a really good picture of, the good, the bad, and the ugly.
Yeah, it's a comprehensive overview.
It is. All right, let's wrap up with Chapter 7 and see what the research guide concludes.
Okay. What's the verdict?
Well, they reiterate all the key points.
Okay.
Their dominant position, their smart diversification into those growth areas, their strong competitive advantages, their strategic use of capital, and their solid financials.
Right.
And they acknowledge the risks,
like
the competition and the regulations, but they emphasize Google's strengths and, the direction they're headed.
Okay.
So their recommendation is to buy the stock for long-term investors.
Makes sense.
They say it's a good value.
Yeah.
Especially now with those dividends and buybacks. But they do say to keep an eye on those regulatory headwinds and the competition.
Right. Things can change quickly.
They can, but overall, they have a positive outlook.
Okay.
They think Alphabet's going to keep growing and creating value for shareholders.
So it's a thumbs up from the research guide.
Yeah, pretty much.
All right. So to recap our deep dives into Alphabet,
Yes.
we've looked at their business model. We've evaluated their management.
Yeah.
Analyzed their financial health, considered market sentiment.
Right.
Looked at their ownership structure, and weighed those risks and opportunities.
Wow. It was a lot.
It was.
But as that final thought from the guide emphasizes, Alphabet's intrinsic strengths and the way they're going, it suggests that they're in a really good position for sustained growth and creating shareholder value.
Right.
So that's definitely something for you to consider as you make your own investment decisions.
Absolutely.
And for our next deep dive,
What is it?
well, you'll just have to subscribe to find out.
Oh, come on, give us a hint.
Nope. You got to stay tuned.
All right, fine, I'll subscribe.
Okay.
But make sure you subscribe too, guys.
Huh?
To the Stock Analytics AI YouTube channel. The link is down in the description. For more detailed analyses just like this one.
And as always, please review our full research and AI disclaimer also in the description.
Very important.
Very important now for one final thought to leave you with.
Okay.
Considering all of Alphabet's investments in AI and this crazy competitive tech world,
Yeah.
what do you think is going to be the single biggest long-term opportunity or challenge that they'll face over the next decade?
That's a tough one.
It is a tough one, but we want to hear your thoughts.
Yeah, let us know in the comments.
So thanks for taking this deep dive with us.
Yeah, thanks for joining us.
And we'll see you next time.